Welcome back. You're with us on BSE on CNBC TV 18 Prime. Joining us on the show now is Dinesh Somani. He's founder ProIntellitrade Services. Mr. Somani, hi. Thank you so much for joining in. I want to start with gold first, and the kind of decline that we've seen from the start of the day. Overnight was 1.5% decline. We've broken below $5,000 an ounce. We're just about holding 4,900 right now. China is out of the markets. Is that one of the reasons that we have seen this profit taking come in for gold? How are you looking at the current levels? What's your sense on where the prices could move in the very near term?
Yes, whatever you said, the Asian markets are closed, China is closed, and that's a major reason for the decline. You can say simultaneously there is a lot of volatility, a lot of news, and a lot of meetings that are going to held today and tomorrow, and that would drive the prices of gold henceforth. We have broken below the 5,000, the sentimental mark, and we expect prices to decline continue, and expecting a target price around 48.40 and 47.70. So a further decline is inevitable, and I think the gold prices and the silver prices both are under pressure. Probably a negotiation between the US and Iran is also possible. Simultaneously, a talk and a peace talk between Ukraine and Russia, that is also possible. So these are the reasons which may drive gold prices a bit lower from here.
You've given us a trend for gold prices on how low can it go. What's your sense also for silver, down almost 2.5% in the markets right now?
I think the major bull run in silver is almost over. Prices have gone up 4 times, and an opportunity to exit long and book profit. That's the thing right now. I think the major support level in COMEX, it was 75, and that is broken today. We have seen close to 2.5% of decline, and we expect prices to decline further to 68, $69. In Indian market, in MCX, I can say the major support level was 2,35,000, which has been broken. Selling advisable from here, keeping a stop loss of 2,42,000. Downside expectation is 2,08,000 as of now.
All right, so almost 2 lakh rupees coming in for the Indian markets there. What is your sense, Mr. Somani, on metal prices? Because on one side, for copper especially, the EV demand estimates are on the stronger side. But the global exchanges are looking at the highest inventories in 21 years. And then you have smelting numbers that is coming via various satellite reports suggesting that the global smelting is the lowest in last 10 years. So very contradicting data that the market seems to be dealing with.
Is actually, but I mean, all the reasons which are bullish, I mean, the things are factored in. Prices of copper have moved from Indian market from 900, 925 levels to almost 1480 levels. I think there could be a consolidation, a bit of a lower trend right now. Uh, Current prices in copper, which is trading around 1188, 1190 level, I think the major support is 1180. If that breaches comfortably, we may expect prices to drip down to 1140 levels. And I think that is the proper level where buying could emerge. From here, we expect a fall of 40, 45 rupees from now.
Hmm. And is that the same view that you would have for other metals also? Because aluminum and zinc are off 3-year highs. We're looking at nickel prices trading at a 1-month lows as well.
Probably the volatility has declined in base metal prices. Earlier, I mean, we see prices of aluminum moving up from 290 to 92 levels to 360 levels, from zinc 295 levels to 330 levels. So the volatility which was happening earlier, I think that is going to stabilize, and prices are going to be stable again, drifting lower to back to the same breakout level of 295 as far as aluminum is concerned. So overall, a bit of a sluggishness, and what I can say, a bit of consolidation, a bit of lower trending prices that may take place in base metals as well, in line with silver prices.
Fair point. How are you also reading the crude oil prices? Because as we spoke at the very beginning of the show itself, that it is going to be about the US and Iran conversation that starts today. US-led negotiations between Ukraine and Russia also are headed or starting today, tomorrow. With all of this geopolitics happening on one side, how are you looking at crude oil prices?
I think the geopolitical tensions would ease out, and that could be the major reason for the fall in bullion prices right now. This could be equally, that is equally relevant to the crude oil prices as well. Crude oil prices are moving up mostly because of the news. The spikes are coming up just because of the geopolitical tension that is erupting it. So I think a bit a decline in the prices is possible as far as crude oil is concerned. In Indian terms, in M6 market, I expect prices to stable around 5,600. Overall, if I look at it technically, I think the prices could move up from 5,600 level back to 6,000 level. So overall, crude looks quite good on chart as of now. a decline of 150 rupees from here could be a good buying opportunity.
The kind of sharp knock that we've seen in natural gas prices, it's turned negative for this year. It's about warm weather expectations for the next couple of weeks. That is what seems to be weighing onto the markets. Are you looking at further decline with winter season demand almost done? How much of a further decline of movement are you anticipating for natural gas?
I think it's a seasonal commodity, and we usually see during the winter season the prices moves up abruptly, almost double. So it happened this year as well. But I think now the prices are going to stabilize. It could be in the range of 250 to 320, and that range could sustain for the next quarter, I think.
If you had to make a portfolio, Mr. Somani, for the rest of this year, what would it look like when it comes to precious metals, base metals, energy? How will you stack that up?
I think I'll prefer gold right now compared to most of the commodities, and I'll wait for a dip in copper as well and crude. These three things I'll add 33% equally on a decline. I can say in Indian terms, if I look at MCX prices, I think 1,43,000 to 1,45,000, that would be the best level for gold to accumulate. 1125 to 1140, that would be the best level for copper to accumulate, and 5600 to 5550, that would be the best price for crude to accumulate. So 33% each would be my portfolio for the next quarter, or I can say for the next 6 months.
All right. Dividing it well between all of those commodities, expected to do well going forward in there. Mr. Somani, as always, thank you so much for joining in and making sense of all of that commodity volatility in the international markets, and how would you take it in your portfolio as well. With that, it's a wrap on this edition of Big C. Thank you for watching.